Hello. Good evening, everyone. Prabha, Kelvin, can both of you hear me? Prabha and Kelvin, can both of you hear me? Okay, Prabha can hear me. What about Kelvin? Can you hear me? Kelvin? Kelvin, can you hear me? Kelvin, can you hear me? What about other students? Where are other students? Why are they not joining? Okay, Rezi has joined us. Rezi, good evening. Can you hear me? Rezi, can you hear me? Okay, great. Okay, so we can start our class without delaying it any further. Right, so the topic that we will be discussing today is cash flow statement. Kelvin, very good evening. Right, so today we will be discussing about cash flow statement. Right, and we will take up some questions as well, and we will see how to make a cash flow statement. Right, Sheikh, good evening. Very good evening. Hope you are doing good, and I hope all of you can hear me clearly. I'm doing good, Sheikh. Thank you for asking. I hope others are also doing good. So my voice is coming clear to all of you? Is my voice coming clear to all of you? Prabha says clear. What about Kelvin, Rezi and Sheikh? It's good. Kelvin, my day was good. Okay, let's start. So, cash flow statement. Right, statement of changes in financial position, which is also known as cash flow. The cash flow statement. Now, the cash flow statement provides us the information about cash receipts or the cash inflows. Cash inflows means the cash which is being coming into an organization. Usage of cash, that is the cash outflows. It means that where does the organization have spent their money throughout the year, right? So it is a organized way of managing the cash outflows and both cash inflows throughout the year during a period of time. Now suppose if I want the details of the cash inflow and cash outflow for a particular quarter, right, or for a particular month, or for a particular date, right, then this cash flow statement is very helpful, right? Inflows and outflows are reported for operating activities, investing activities. Operating activities means day-to-day activities of the organization. Investing activities means where does the organization is investing their money. Financing activities. So clear so far? Any doubts anyone has till now? If anyone of you have any doubts, you can ask me. Okay. Okay, I think few more students have joined us. Divya, Manoj, Seher, and Akshata. Can all three of you hear me? Divya, Seher, and Akshata. Okay. Divya, can you hear me? Okay, great. So, good evening, all of you, and welcome to the class. Welcome to IMTS. So, today we are discussing about cash flow statement, right? We have just started the class few minutes back, right? We are on second slide, right? So, we were just discussing about the cash flow statement. So, this statement gives us the information about the cash receipts, which is also known as the cash inflow. Cash inflow means the money which is flowing into the organization, which is coming into the organization. Usage of cash, where does the organization spending their money, which is known as cash outflow, and during a period of time. It means that suppose if we want to get the information about a particular period of time, from when to when does the organization have spent their money, right, or about the cash inflow or the cash outflow, we can also get that information. Right, so inflows and outflows are reported for these three types of activities: operating activity, investing activity, and financing activity. So you can see this chart of cash inflow and cash outflow. Now this is the cash pool. Let's start with financing activities. So financing activities can be issuance of equity securities, issuance of debt, which can be in the form of bonds and notes. Now this is the inflow of cash which is coming into the organization, right? Similarly, we have operating activities like when cash receipts or revenues exceeds the cash expenditure, then we have inflow of cash. Similarly, we have investing activities like sale of property, plant and equipment. When we sell the property or equipment, a plant means production plant, then the money that will come will go into the cash account. Sale of debt or equity securities of other entities, collection of loans to other entities. This also comes into cash inflow. Now let's see the three cash outflow. Suppose in operating activities, when cash expenditures or expenses exceed the cash receipt or revenues, it is known as outflow of cash or cash outflow. Similarly, for investing activity, if we purchase any property, plant and equipment, or we purchase the debt and equity securities of other entities, or take the loans from other entities, then it is known as cash outflow. Similarly, for financing activity like paying of dividends, redemption of debt, reacquisition of capital stock is outflow of cash. Clear, everyone? Let's move to the next slide. Classification of business activities, inflow and outflow of cash. Now when you will be forming this cash flow statement, you have to be very careful of what to put in cash inflow and what all information you have to put in cash outflow. Right. So in cash inflow comes cash sales received from debtor, commission and fees, and royalty. Debtor means someone has taken money from you, right, on interest, and he has to return the money. That he is known as debtor. Debtor. And in cash outflows comes cash purchases, payment to creditors. Cash outflow means the money which is going out, or the money which the company is spending. Cash operating expenses, payment of wages, income tax, manufacturing expenses. All these comes in cash outflows. Cash affects the transaction on net income. Similarly, for investing activities, in cash inflow we have sale of fixed assets, sale of investments. When we sell any assets or investment, the money that will come will go into the account of the organization. That is why we have termed it inside cash inflow. Interest received, dividend received, working capital recovery. All these things comes inside cash inflow. For cash outflow, purchase of fixed assets, purchase of investments, working capital. This comes in cash outflow. Let's see the in financial activities, the cash inflow and cash outflow. Issue of shares in cash, issue of debentures in cash, proceeds from long-term borrowings. This comes in cash inflow. And in cash outflow, payment of loans, redemption of preference shares, payment of dividends, interest paid, repayment of finance or lease liability. All these things comes inside cash outflow for financing activities. Now, objectives of cash flow statement. Why do we need a cash flow statement? Highlighting cash flow from different activities. Right, so with the help of cash flow statement, we can highlight the activities in which the money is being heavily spent or money is being heavily received. Right, short-term planning, cash flow information helps to understand the liquidity. Right, so this with the help of this cash flow income, we can understand how much money does the organization have with them. Liquidity means money available in cash. Efficient cash management, right? So it makes the management of the money very easy. Prediction of sickness, comparison with budget, cash position. What is the exact position of money available with the organization? Limitations of cash flow statement. It does not show the liquidity position of the firm. It does not. It is not a substitute of income statement, right? So income statement shows the full liquidity position of the firm. Does not show the financial position of the firm in totality. Now you have to, let's see the difference between cash flow statement and fund flow statement. Right? These two are different things. Don't get confused between them. Any doubt so far? Okay, so just that you are a bit fast. Okay, Kelvin, I will go slow. So we can see the difference between cash flow and fund flow, right? In terms of basis of accounting, the cash flow recognizes the cash basis of accounting, and for fund flow, it is based upon accrual basis of accounting, that is the working capital. So in terms of significance, it is useful for short-term financial planning, this cash flow, and funds flow is useful for long-term financial planning. Schedule of changes in working capital. Such a schedule is not prepared for preparing cash flow statement. Schedule of changes in working capital is prepared separately. Causes of variation. It studies only the causes of cash variation, and the fund flow studies the causes of change in working capital. Now let's see how to prepare a statement of cash flow. Use net operating income as the use net operating income as the starting point to get net operating cash flow. Add back any non-cash expense, for example, depreciation. So we can get the net cash flow equal to net cash inflow minus cash outflow. Net operating cash flow will be equal to income after taxes plus the depreciation, right? So you can note on these two formulas. Prabha, can you hear me? Okay. We will take a few questions shortly. Now, for preparing a statement of cash flow, there are two methods. One is the direct method and one is the indirect method. So you can see this this format for direct method. So in this, first we are calculating the cash flow from operating activities, right? So in this comes the cash receipts from sales, commission and fees, interest received, right? Then we will check the cash payment for purchases, payments to and for employees, operating expense, interest payments, direct taxes paid, right? Kelvin, are you following me? Okay, the formula. 1 second. This is the formula. Now, mostly in the industry, we use indirect method more. Like 98.8% industry uses indirect method and only 1.2% uses direct method. Companies favor the indirect method for two reasons. It is easier and less costly to prepare. It focuses on the difference between net income and net cash flow from operating activities. This is the book approach. This is your income statement and this is your cash flow statement, right? So this is your operating income, investing and financing. Investing, all these things comes capital investments, salvage proceeds. We will see a few examples shortly. Gain tax, working investment capital, working cap recovery, capital recovery. This is the format for cash flow statement. So first we will calculate the cash flow from operating activities, then from investing activities, then from financing activities. Right. So suppose in cash flow from operating activity, we will list down the individual items. Right. Then we will calculate the net cash provided by operating activity. Here also we will list down the inflows and the outflows. Right. And after these three comes net increase in or decrease in cash, cash at the beginning of the period, cash at the end of the period, non-cash investing and financing activity. So this is just the format. Clear everyone? Prabha, are you facing any difficulty in understanding? Are you not able to follow me? Can't able to differentiate. Okay, we will take a few questions. Right. Then it will be more clear to you. This is okay. And all of you see this indirect format for cash flow statement. Everyone, can you see? KP Ramakrishnan, can you see? Dijesh, Divya, are all of you following me? Ramakrishnan, are you following me? Okay, 1 second. Is it better now, Kelvin? Okay. So now you can clearly see that first comes cash flow from operating activities. So in this we have to insert the net profit and loss account or difference between the closing balance and operating balance of profit and loss account. So we can add what all things we can add over here. Transfer to reserve, proposed dividend for the current year, interim dividend paid during the year, provision for tax made during the current year, extraordinary item if any debited to the profit and loss account, and we can here less means subtract. Extraordinary item if any credited to the profit and loss account, refund of tax credited to profit and loss account, net profit before taxation and extraordinary items. What I will do is I will ask the coordinator to upload it on LMS, and all of you can download it from there, right, Prabha? Okay. Similarly, like these things, non-operating expenses, these things comes, right, which we can add. This is the format. Now let's proceed and take a few questions. Sorry. Yes. This is the question. From the following information, prepare the cash flow statement for the year ended on March 31st, 2007. Yes, so this all these details are given. Opening cash balance is 10,000 rupees. Closing cash balance is 12,000. Decrease in debtors is 5,000. Increase in creditors is 7,000. Sale of fixed assets is 20,000. Redemption of debentures is 50,000. Net profit for the year is 20,000. This information is given, and we have to let's see the solution. Now see, this is how we will prepare the cash flow statement. This is the solution. So first we will write it like this. Cash flow statement for the year ended 31st March 2007. Then the first thing comes cash flow from operating activities, which is 20,000 rupees. You can see net profit for the year will come, right? This is this 20,000 will come in cash flow for the operating activities. Net profit for the year before the tax. Sorry, this is the net profit for the year before the tax. So in this we can add the increase in debtors, that is 7,000, and decrease in debtors, that is 5,000. So this 7 plus 5 will become 12,000, right? And if I add this 20 plus 12, it will become 32,000. So my net cash provided by operating activities is 32,000 rupees. Clear, everyone? Okay. Next is cash flow from investing activities. We have invested 20,000 rupees, and proceed from sale of fixed assets is also 20,000. So sorry, in cash flow from investing activities, we have received 20,000 rupees from sale of fixed assets. As you can see, sale of fixed assets is 20,000 rupees, third last, right? So this comes in investing activities. So this is the total net cash flow for investing activities is 20,000. Now next is cash flow from financing activities. So in this comes the redemption of debentures, that is 50,000. You can see this one, redemption of debentures, second last. This will come in cash flow from financing activities. Right, we will add them. Right, so for my net cash flow used in financing activities is 50,000. Right, so my net increase in cash will be how much? The sum of this 32,000 plus 20,000 plus 50,000. Sorry, minus. Yeah, minus. Yeah. This is the net cash flow in financing activities is 50,000. Right, now D. Net increase in cash will be 2,000, and we add the cash at the beginning of the period, 10,000. So my cash at the end of the period will be 12,000 rupees. Yeah, 10 plus 2 is 12. Actually, this should be minus A plus B minus C. So 32 plus 50 plus 20 is 52. 52 minus 50 is 2000. And the cash at the beginning of the period is which is available with me is 10,000. So 10 plus 2 is 12,000. Clear everyone? Sanobar, Seher, Vijesh, Rezi, Akshata. Yes, you need to practice. Okay, let's take a look at one more example. Now, this is indirect method, the one that we have solved. I think this is the indirect method, if I'm not wrong. Now, one question is this, example number, illustration 12. Can all of you see? Okay. From the following particulars, prepare the cash flow statement for the year ended 31st March 2007 by the direct method. So these are the information given. Cash sales is of rupees 65,86,000. Cash collected from debtors during the year is 33,23,400 rupees. Cash paid to suppliers was 79,36,810 and 9,87,500 was paid to and for employees. Furniture was booked for 18,500 and sold for 11,000 and the new furniture costing was 83,160. Rupees 83,000 was purchased. 6 point, debentures of the face value of rupees 3 lakh were redeemed at a premium of 2% interest on debentures. Interest on debentures rupees 84,000 was also paid. Dividend of rupees 4,50,000 for the year ended on 31st March 2007 was distributed in May 2007. And last one, cash in hand and at bank as on March 31st 2006 and March 31st 2007 was rupees 51,070 and 5,74,000 respectively. Clear? So these are the information given. Now we have to prepare a cash flow statement. You can see this is a direct method. Just read this, try to go through it once and then I will explain. Clear? Okay, let me explain. Now first we will find the cash flow from operating activities. So in this first we have the receipts of cash sales which was 65,86,000 and the cash receipts from customers was 33,23,400. As you can see, this one. First one 65 lakhs, 86,000 cash sales, and cash collected from debtors was 33,23,000. So both these things will come in cash flow from operating activities, and we will add them up. So it will come out to be 99,09,400, and the payments which was made, payment for purchase and to suppliers and payment to and for employees, 79,36,000 and 9,87,500. You can see this 79 lakh and 9,87,000. We will add them up. This one. So payments. This is cash inflow. This is cash outflow, right? So outflow is 89 lakh 24,000 and inflow is 99. So the difference will be net cash from for operating will be receipts minus payments. So it will come out to be 9,85,090. Yeah. Now next is cash flow from investing activities. So whenever we talk of investment, we talk about assets. So we have purchased assets, fixed asset of 83,160 rupees, and proceeds from sale of fixed assets is 11,000. Right. So we will subtract. So we will get cash flow from financing activities is 72,160. This 83,160 was purchased and this was sold. So 83,160 minus 11 is 72,160. Then for financing activities, we did redemption of debentures at a premium. So 3 lakh for debentures and 6,000 for premium. So total it will come out to be 3,06,000, and interest paid on debenture is 84,000. So when we add them up, it will come out to be a total of 3,90,000. Net cash used in financing activities. You can see 3 lakh at a premium of 2%. So 2% of 3 lakh will be how much? 6,000 rupees. Getting it? 2 divided by 100 into 3 lakh will give you 6,000. That is what they have added over here. This 6,000, right? So 3 lakh 6,000 plus 84,000 gives 390. Then right, then we have to use the same formula. Net increase in cash and cash equivalent will be 5,22,930. Right? How they have got 390? They have added up all the cash flow. 985 plus 72, 160 plus 390. It will give 522,930. Cash and cash equivalent as on March 31st will be how much? 51,070 as given. This one 51070. Actually, this is for 2006 and this is for 2007. Yes, this is for 2006 and for 2007. Right. So if you add them up, this 522,930 plus 51,070, you will get this 5,74,000. And if you compare it, you will get the same value. Right. So we have given all the details and it is and on adding all the expenses, it is coming out to be equal to 5,74,000. So it means that our working is correct. Clear? Now this is one more question. You can take a look at this example number 13. From the summary, okay, let me one second. Yes. From the summary cash account of X Limited, prepare the cash flow statement for the year ended on 31st March 2007 by direct method. These are the details given. Right, to payment by payment to suppliers is 20 lakh, by purchase of fixed asset is 2 lakh, overhead expense is 2 lakh, wages and salaries is 1 lakh, income tax paid is 2,50,000, dividend paid is 3 lakh, repayment of bank loan is 3 lakh, receipt from customers is 28 lakh, to issue of equity shares is 3 lakh, to sale of fixed assets is 1 lakh 50,000. Right, now we can convert it into cash flow statement like this. All of you can go through it. Yes. Nothing much to explain in this, just go through it. Actually, in this the main thing is to judge that which thing will come under operating activities, which will come under investing activities, and which will come under financing activities. We have to be sure about it. Like the payment of bank loan will come under a financing activity, right? Or proceeds from issue of equity shares will come under financing activity like that. Rest is the calculation work. Here it's easy. Actually, this PDF is of 30 pages, right? So you can go through all the examples. Right? There are many more examples given. I will show to you in short. Right? All of you can. In the meantime, all of you can practice or go through all the examples. Right? There are a lot of examples. Sufficient amount of examples for you to practice. Right? You can see I have these are various types of problems. Right? So you can go through all of them. There are around 15. Most probably by tomorrow. Tomorrow you will get your LMS. If you don't get it, let me know in tomorrow's class. Okay. Or you can okay, you will get in your LMS. No, don't worry. Clear? Nothing much to explain in this topic, so we can stop over here today. I have to catch one train also after 25 minutes. Okay, so that is all for today. Good night. Take care, all of you. See you tomorrow. Yes, we need to learn both methods. Okay, so good night. Take care. Bye bye. See you tomorrow.